special show. I'd want to understand, how are you looking? When was the last time this happened? That's the first thing that anybody would think. And B, what are the do's and don'ts according to you that you think investors, or the traders rather, would want to keep in mind while trading in a session like this?
Sure. So, good morning.
Good morning.
And I would say it's a rare day where we have seen, market is on a full, throttle on a weekend. And obviously, the one thing one have to be aware is that, we will not have the full volumes today, because a lot of those, market participants will not be there in the market. So the volume will be relatively low. And there would be, I would say, some more pronounced impact on stock prices because of lower impact. So one has to be watchful for today's sessions. But if we really see the last week which has gone by, we have seen a good amount of volatility. And we expect that, this week will more or less reflect what this year will be there for investors. Because, we saw that obviously there was a kind of a little sell-off, or the risk of sentiment which started building up in the global market after the US retails data and all the consumer service data which came out, which gave the hint that possibly the rate cut is not that easy to happen in the US. And even the probability of rate cut went down from almost 50-60% and more to below that level. And we saw that the hardening of will happen, and possibly the strengthening of US dollars, which has an impact on all of the global markets. But at the same time, if you look at yesterday's closing session of US market, S&P 500 came back to an all-time high level. Even if you look at on our market back home in India, we were almost like at Monday, the Nifty was an all-time high, and we saw sharp cuts across market segment in the last 1 week. And this has to do a lot more to the result season which came out, which investors are expecting or are viewing it more as a modest one rather than, what the expectations were. So if you look at, what happened, especially across sectors, there's not been a very, I would say, a compelling earning growth story so far. So it's too early to say right now, but there has been a very clear mixed trend, Nikki.
Okay. Any themes per se that you'd want to keep in focus ahead of the Ram Mandir opening, which of course is a very historic event, and rightfully so. Equity markets are setting the stage for it. You have RBI, which is working in half day. How are you looking at the development? Which themes and stocks that you think would be in focus today in the run-up to the event, if at all?
Obviously, Nikki, this is a great event, and it has a bearing on economy as well, especially in Uttar Pradesh. We have been hearing about the kind of demand which hospitality or the hotels, travel possibly will see because of this event. But I would say that extrapolating it single-handedly will not be very remunerative in my assessment. These are short-term events. We should look more at a holistic picture of India's infrastructure growth story, and possibly, the whole, I would say, the building up of a consumption thesis, and where events like this will foster the growth going ahead. So I would advise investors not to, go in for events-based investment, though that to a specific event-based investment. Whatever you're trying to get into your portfolio, make sure you have a 2 years, 3 years kind of an, clear mindset or the growth visibility for those businesses. That will create more wealth for investors rather than, just harping on singular events. What for me is more important for this calendar year is, how this existing government possibly will see a continuation, and the policy continuity is what something is very, very important. As well as, we have to see even then we have election in US this calendar year, we have Fed events where we will see, and even the ECB where we possibly see a change in the interest rate. I believe those will have much more impact than any of those singular events, Nikki. And I believe investors should be watchful of that. It could be, can see it's kind of a trap sometimes, where you get into high valuations and then you stay put for many months or years to even get back to evaluation, given the lofty valuations we are sitting on.
Yeah, I'm sure. I mean, at the start of the month, we, most of the editors around, and of course the conversation that we were having was also suggesting that just could be a suckers rally, where you see some amount of rally, I mean, some amount of traction building into the markets before more caution creeps in. But that's one. Today's theme, of course, I'm sure you'd agree, is RIL. Not much of reaction which is per se seen by the stock today, but the numbers are fairly decent, I would say. How are you looking at it? Do you anticipate some more amount of activity perhaps building in on Tuesday? How are you looking at it?
Definitely. So whatever results we have witnessed yesterday and their impact, will be more visible when the market will completely enforce. The one point which I tried to make earlier also, that in this quarterly season, the kind of impact on the stock prices we have seen is pretty pronounced, right? If you remember the likes of, businesses like Oracle Finance, or we saw with HDFC Life Insurance, LTI, Wipro, Infosys. Majority of these companies have seen movement around 10% plus minus after the result were declared. And that is a very, very important point here, because, the investors should be watchful of, because these kind of impact or this kind of movement only comes when you have a very little room of error. Your valuations are stretched, and your market participant expects that at least they meet the minimum criteria for the group. And if there is any miss, that the investors would be very hard on those companies, and the stock prices will reflect. So one has to be very, very watchful of that. And obviously, to tell you, obviously, Reliance Industries reported number, which I believe is decent, more on a mixed trend, where obviously we discussed Reliance Industries on our previous guest. But the slowdown, somewhat slowdown in O2C business has been more or less settled off by a good upstream and retail side. And I believe that true impact will be visible once we see a full market on Tuesday. Even we have results like Kotak and ICICI Bank on today, and I think even their impact will be more visible in the market ensues with its full throttle.
Sure, I mean, that's exactly, and also we have in two expiry, Bankex expiry, and you have also ICICI Bank and Kotak Mahindra Bank, which will be reporting in the numbers. Banks is another pain point right now for the markets. After HDFC Bank reported in the numbers, which weren't really encouraging, we saw huge, FII selling out HDFC Bank in a big way. And now look at IndusInd Bank also. After a decent show, there was some amount of profit booking which crept in. I think, what are you going to be looking out in terms of the indicators from these two names, which could otherwise change the somewhat narrative that the Q3 season is building up for the banking stocks per se?
Right. So we have seen a couple of banks, obviously HDFC Bank was one of them where we saw a pronounced impact had to happen. But, we saw Federal Bank, which reported numbers, IndusInd and possibly RBL reported number yesterday. So far private banks, I think South India Bank has also came out with the numbers. But, one thing which is very clear, that there's a couple of impacts on account of, first is, that AIF regulations, which have, where most of this bank have created provision, which has hit up their, PAT to some extent. But majority of this bank has been able to maintain good advances growth. Place like IndusInd has been able to maintain their names. Obviously, we saw some moderation in names for the HDFC Bank and the Federal. But overall, I would say the story is not that bad given the advances growth and NIM protection, because we are aware that the cost of funds are rising up, and so those banks who will be able to mobilize their credit into more high-yielding assets, possibly will be able to maintain the show. What I'm really excited about for this, quarter result is how the PSU banks provides results, because we will have one element of, treasury income, which will be much higher for PSU banks. And I believe the credit growth part of them will be more or less in line with what major of these private banks are offering. So I believe I will be really watchful out for PSU banks for this quarter. And then possibly we'll take a call that, how this banking SSPs has done. When I go to a segment which are non-banking NBFCs, not much, many have reported numbers so far, but that is also a segment which would be very, very catchy to take a call. I believe, overall, we expect that, the NIM moderation, the rising, credit deposit ratio, and it will possibly have an impact on these banks in the coming quarters. And if you have a 2 to 3 years quarter, the two only thing which I would strongly look at is how the credit cost will pile up for the next 2 3 quarters, and obviously on how the strong liability franchise our bank has been will be to manage their names and the other areas. So overall, we're very very comfortable at banking as a space. I believe this quarter we will get, after whatever the movement of prices we have seen, this quarter is providing opportunity in some of the banking names, which investors will capitalize on if they have a 2 3 years view going ahead. So that is what it is. Obviously, the trend will be clear when you see ICICI, Axis, and Kotak to really see or to take a call about how the banking sectors will look like in the coming quarters.
Aishwarya, any banking names that you like? HDFC Bank, ICICI, Kotak Mahindra, SBI for that matter, in the pecking order based on the valuation, based on earning outlook, any parameter that you are looking at?
So, we are in for ICICI Bank. I believe ICICI Bank is pretty consistent over the last 6 7 quarters. And that is what I believe should be the largest allocation. So coming back to HDFC Bank, I believe the biggest thing which supports us today is valuation. Obviously, we understand that this is a marquee bank. They have the strongest operating parameters. The area which market is pretty, obsessed about is their ability to grow, given their, you look at the LCR or you look at the CD ratio, they're obviously a big impediment for them. But I believe the valuations are justifying this thing. And if you have possibly 1.5 2 year view, a healthy allocation to HDFC Bank at these levels could be pretty, good from a return perspective. So ICICI Bank, HDFC Bank. As I said, I'm pretty optimistic about PSUs, and I want to play either through SBI or BOB. So I think SBI is something which we are very comfortable with. So that will be the top three banks for us. Axis Bank is another one which looks pretty interesting to us. So it's between Axis and Indus. The only area, so if you look at the Indus results, they were able to maintain names and the growth part. But there's always a, lingering fear about, the asset quality, visibility, and the consistency. And I believe probably Axis will be more consistent in that parameters. So if an investor wants to add allocation to slightly higher risk, I believe Axis could be one good options from that perspective. So that will be our, I would say that ranking for the banks for investors for at least 2 to 3 years visible.
Okay, the final question that I have for you is there's a bit of downgrade which is coming from for HUL. Essentially, HSBC has given that downgrade on back of earnings, saying that it's just not a play where macros essentially are not really stacking up the way HUL needs in terms of the rural recovery, but it's also the growth drivers which were otherwise doing well, like home care segment, which have started showing some signs of exhaustions out there. How are you looking at HUL and companies which is as big proxy for economy and consumption story essentially? How are you looking into the numbers?
Nikki, this definitely is an area of concern. So if you look at HUL's last 3 quarter results, and if you look at their volume, though this quarter we did saw 2% number, but the trend is very, very similar. The last 3 quarters numbers will be 3%, 2%, and 2% growth on volumes. And as you highlighted, the weakness in the home care business is definitely indicating that two things. One, obviously, the rural segment possibly is not very strong from demand perspective, and also the urban poor. So those areas are indicating us a lot about the current underlying weakness in the economy somewhere, in spite of all the excitement that we are witnessing. And we should not forget that we are seeing the best of the inflation deflationary trends on commodities, and we saw that last 2 quarters possibly their gross margin around 54%. I think they did almost 53% plus this quarter, has been a savior for them. So not very strong growth, but deflationary trend has enabled to manage the show at the PAT level. But I believe this trend possibly will continue, for the next 2 to 3 quarters. Even the management of HUL thinks so. And when I correlate with HUL numbers, so if you go deeper into the numbers, the premium category have done well. Both in BAPC, which is beauty products, and even in home care side, premiumization trends continue for HUL, and which I believe is a silver lining on the dark clouds. But when I see the results of Shoppers Stops of the world or Metro for the worlds, which are, I would say, quasi discretionary kind of a player, we're not seeing a very strong traction. So I would say it's a mixed signals. We will have to see more of other discretionary players reporting their numbers to call out a trend that whether really the slowdown is something to be worried of. But coming back to HUL, I believe until unless they come back to 3 to 4% volume growth, this is definitely a case of worry. And last one point, which I think I missed out for HUL is, whenever there is a deflationary trend in the economy, this whole set of unorganized players become very, very aggressive. And if you look at the last 15, 20 years of history, that has always been the case. So possibly, obviously the HUL management has been saying that they've been getting garnering market share, but might be there in some category or some segment or some regions, these unorganized players have possibly become more aggressive and they might have get up some of the businesses which possibly would have gone to a large organized player like HUL and others. So this is one trend which I will be very curious to know and how things are developing for when we see other FMCG results. But I believe overall, I think it's a weak set of numbers and is a cause of currency.
All right, Aishwarya, we're just going to leave it at that. And thank you so much for taking out the time and joining us for a Saturday special show.
Thank you. Thank you so much.
All right, let's also navigate and quickly address in Kotak Mahindra Bank. That's the one that will going to be coming out with numbers. And unlike HDFC Bank, it is not a bank which gives an quarterly updates. So any kind of growth in terms of the advances deposit will be something that we need to keenly eye out. And apart from that, it also has a new CEO, of course, which is a veteran banker at the helm. That also is something that we need to watch out for. This is going to be the first earning per se under the new leadership that the bank has. Remains to be seen. How does that stack up? But overall, it's doing well in trade today. Almost 0.4% clocked in for Kotak Mahindra Bank. It is a good session of trade, and I hope you've had a good one too. Volumes are expected to remain to an extent a bit low. Monday is going to be, markets are going to be shut for trade. But with this, it's a wrap. And goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Money Control app.